Please subscribe, like, and comment.
All right, so you're here for the lowdown on Bitcoin's latest performance, huh? Well, buckle up because it's been a wild ride. The last 3 months have seen a 30% drop, and let me tell you, our sources are painting a pretty fascinating picture of what might be going on.
Oh, absolutely. Bitcoin is always keeping us on our toes.
Isn't that the truth? So we've got CoinTribune breaking down some insights from Bitfinex. Then there's TronWeekly pointing out some seriously bearish signals. And Protos, well, they're laser-focused on MicroStrategy and their, shall we say, bold Bitcoin strategy.
Yeah, MicroStrategy's situation is definitely a case study for the books. It really highlights the risks and the rewards that come with going all in on Bitcoin.
For sure. So let's jump right in. CoinTribune kicks things off by talking about this wave of panic selling short-term Bitcoin holders. Those folks who maybe jumped in during the peak, well, they're getting spooked and hitting that sell button. And that's creating this domino effect across the market.
It's a classic case of herd mentality, isn't it? One person's fear can quickly spread to the entire group.
Right. And what's interesting is that this wave of selling seems to coincide with institutional investors taking a step back.
That's right. That's a big shift from what we saw last year when institutional interest was one of the main drivers pushing Bitcoin's price up. Now, with all the uncertainty in the global economy, those big players are getting a bit more cautious.
Makes total sense. CoinTribune also points to inflation, the Fed's tight policies, and investors seeking safer havens. It's like everyone suddenly remembered that Bitcoin is labeled a risk asset, and when things get shaky, well, that risk becomes a lot more real.
Exactly. That risk asset label is key to understanding why Bitcoin reacts so strongly to these macroeconomic tremors. It's not some isolated entity. It's very much woven into the global financial system, which can be both a good and a bad thing.
Okay, so we've got shaky markets, nervous investors, and Bitcoin's inherent volatility all playing a part. But then TronWeekly comes along and takes things a step further. They're throwing out some predictions that are, well, let's just say they're not exactly painting a rosy picture.
Yeah, TronWeekly highlights a prediction from CryptoQuant's CEO, Ki-Young Ju. He's saying we could be looking at a 6 to 12-month bear market for Bitcoin.
A 6 to 12-month bear market. Wow. That's quite a shift from the optimism we were hearing just a few months ago.
It is. It seems his change of heart is driven by a few key factors.
And those are?
He points to diminishing liquidity in the Bitcoin market. Basically, that means there's less fresh money flowing into Bitcoin. One way to track this is through something called realized capitalization.
Realized capitalization. Okay, I'm going to need a quick explainer on that one. What exactly does that mean?
Sure. So realized capitalization basically tells us the value of all the Bitcoin at the time it was last moved. If this metric starts to stagnate, it suggests that fewer new investors are entering the market.
Got it. So less new money equals less demand, which is obviously not great for price stability. He also mentions increased whale activity. Now, I'm pretty sure actual whales aren't buying Bitcoin. So what's the deal here?
Right? In the crypto world, whales are those individuals or entities holding massive amounts of Bitcoin. And what's raising eyebrows is that new whales seem to be selling off their holdings.
So even the big players are starting to show signs of uncertainty. What do you think they're seeing that's making them nervous?
It's hard to say for sure. It could be a combination of things, concerns about the overall market direction, profit-taking after a period of strong gains, or maybe they're sensing a shift in investor sentiment. Whatever the reason, it's definitely something to keep an eye on.
Makes sense. And the last factor he mentions is ETF outflows. Now, for those who need a quick refresher, what exactly are ETFs and why are these outflows a big deal for Bitcoin?
An ETF, or exchange-traded fund, is essentially a basket of assets that you can buy and sell on a stock exchange. In this case, we're talking about ETFs that hold Bitcoin. When we see outflows from these ETFs, it usually means institutional investors are pulling back, which, as we discussed earlier, points to a decrease in overall demand.
Right, so it all ties back to that idea of less liquidity and institutional investors hitting the brakes. And to add even more uncertainty to the mix, we've got the Federal Reserve's upcoming decision on interest rates. Everyone's on the edge of their seats waiting to see what they'll do. Can you remind us what's at stake here? What does it mean if the Fed goes dovish versus hawkish?
Think of it this way. A dovish stance means they're likely to keep interest rates low to stimulate the economy. This could be good news for risk assets like Bitcoin as it keeps money flowing and encourages investors to seek higher returns. On the other hand, a hawkish approach means they're going to raise interest rates to combat inflation. This could make borrowing more expensive and potentially push investors towards safer assets, putting downward pressure on Bitcoin's price.
So it's a bit of a guessing game right now. Nobody knows for sure which way the Fed will go, and that uncertainty is definitely fueling a lot of the volatility we're seeing.
Absolutely. And that brings us to perhaps the most fascinating part of this whole situation, the wildly different price predictions floating around.
Right. We've got some analysts saying Bitcoin could hit $200,000 by the end of the year, while others are predicting a crash down to $20,000. It's like they're talking about two completely different things.
It's a crazy contrast, isn't it? And it really highlights the challenge of predicting Bitcoin's future. On one hand, you've got someone like Matt Hugin, the chief investment officer at Bitwise, who's incredibly bullish.
And what's his reasoning?
His optimism stems from his belief that the Fed will ultimately adopt a dovish stance, creating a more favorable environment for risk assets like Bitcoin. He sees this current downturn as a temporary blip, a buying opportunity, even before the next bull market kicks in.
Okay, so that's the optimistic view. Then you have someone like Peter Schiff, who, well, let's just say he's not exactly known for being a Bitcoin fan. He's got a much more dire outlook, right?
Yeah, Schiff's been a vocal critic of Bitcoin for years. His prediction of a potential crash to $20,000 is based on his belief that Bitcoin is intrinsically linked to the performance of the Nasdaq. He argues that as tech stocks continue to struggle, Bitcoin will inevitably follow suit.
So two very different perspectives, both with their own sets of assumptions and potential biases. I guess the key takeaway here is that nobody has a crystal ball.
Exactly. That's why it's crucial to understand the reasoning behind each prediction, to look at the underlying assumptions and potential biases, because ultimately it's up to each individual investor to decide which narrative resonates with them.
All right, well, you've definitely given us a lot to think about. We've covered panic selling, institutional uncertainty, those bearish market signals, and the Fed's looming decision. But there's one more piece of this puzzle we need to explore, and that's MicroStrategy. They've gone all in on Bitcoin, and their strategy have been making headlines lately, to say the least.
Yeah, their situation is pretty remarkable. They're holding almost 500,000 Bitcoins purchased at an average price of $66,360.
So they place a huge bet on Bitcoin's future. But with the recent price drop, things are starting to get a little uncomfortable for them, aren't they?
That's right. The gap between Bitcoin's current price, which is hovering around $80,000, and MicroStrategy's average cost basis is shrinking. They're down to a 27% cushion, meaning the price doesn't have to fall much further before they start losing money on their investment. And given the sheer scale of their holdings, those potential losses could be substantial.
Wow, that's a lot of pressure. So let's dig into this a bit further. What's MicroStrategy's history with Bitcoin? Have they always been this exposed to its ups and downs?
Their journey's been a real roller coaster ride, to say the least. Protos highlights how comfortable they were back in 2017 during President Trump's inauguration. Bitcoin was soaring, and they had a whopping 73% cushion between the price and their cost basis. But as we all know, the crypto market is anything but predictable.
All right, well, let's unpack this a bit further after a quick break. Don't go anywhere. We'll be right back.
Sounds good.
So before the break, we were digging into MicroStrategy and their massive Bitcoin investment. They had some good times back in 2017, but things haven't always been smooth sailing, have they?
Not exactly. A whole bunch of factors chipped away at that comfy cushion they were enjoying. Protos mentions things like the Trump administration's interest in meme coins, the indecision around a potential U.S. strategic Bitcoin reserve, and even those fluctuating tariff policies impacting the wider markets.
So even with all that going on, they decided to double down. They continued buying Bitcoin, even announced a huge $21 billion plan to buy even more. But Protos also pointed out a bit of a catch, right? It doesn't sound like they've actually gone all in on that plan.
Yeah, that's an interesting point. There's this stark contrast between their past buying sprees when Bitcoin was trading above $100,000 and they were spending tons of money compared to what they're doing now. Their most recent purchase was a measly 130 Bitcoin, their second smallest ever.
That is pretty strange. It's almost like they're getting cold feet, a little hesitant.
Yeah.
Is it possible that even MicroStrategy, a company that's been so publicly bullish on Bitcoin, is having second thoughts about their strategy?
It's definitely a possibility worth considering. Their recent buying behavior, or lack thereof, could be interpreted as a sign that they're getting a bit worried, maybe even losing a bit of faith in their own convictions.
So to put it simply, MicroStrategy is in a pretty risky spot. Their strategy hinges on Bitcoin's price going up, but the market seems to be throwing them a curveball. It really shows you how risky it can be to put all your eggs in one basket, even if that basket is full of Bitcoin.
Absolutely. Their situation is a perfect example of how external market forces can throw a wrench in even the most carefully planned strategies. Nobody, not even seasoned investors, are immune to the unpredictable nature of the markets.
It's a good reminder for all of us, I think.
Yeah.
But let's step back from MicroStrategy for a minute. I want to circle back to something you mentioned earlier about Bitcoin being intertwined with the global economy. It's easy to get lost in all the technical jargon and price predictions, but that connection seems really important for understanding the bigger picture.
It's crucial. We can't analyze Bitcoin in isolation. It's influenced by this complex web of factors, from global economic conditions and geopolitical events to regulatory shifts and even technological advancements. For example, the Federal Reserve's upcoming interest rate decision, something we touched on earlier, has far-reaching implications.
Right. It's not just about controlling inflation in the United States. A rate hike here can trigger a ripple effect across the globe, impacting currency exchange rates, shaping investor sentiment, and ultimately influencing how capital flows into or out of assets like Bitcoin.
Exactly. It's all interconnected. And that interconnectedness makes this space both incredibly fascinating and incredibly challenging to predict. We have experts forecasting Bitcoin at $200,000, while others predict a crash to $20,000. That's a huge difference.
It really drives home the point that nobody can predict the future with certainty.
Right. Instead of trying to time the market or chase after the latest hot prediction, it's much more sensible to focus on understanding the fundamentals.
So things like adoption rate, the evolving regulatory landscape, the technology itself, and of course those broader macroeconomic trends, those are the things that will really shape Bitcoin's long-term trajectory, right?
Exactly. Those are the elements that will ultimately determine whether Bitcoin lives up to its potential or fades into obscurity.
Okay, that makes sense. But it still leaves us with a lot of uncertainty. How can anyone, even someone who's really knowledgeable about finance, make informed decisions about Bitcoin in such a volatile and unpredictable environment?
That's the million-dollar question, isn't it? And unfortunately, the answer isn't always clear-cut. But there are some key principles that can help you navigate this complexity. First and foremost, diversification is crucial. Don't put all your eggs in one basket.
So even if you're super bullish on Bitcoin, it's not wise to bet your entire portfolio on it.
Exactly. Spread your risk across different asset classes, stocks, bonds, real estate, precious metals. Diversifying creates a buffer. It helps cushion the blow if one particular asset takes a hit.
Solid advice. What else should we keep in mind?
The second principle is just as important: emotional discipline. Never let fear or greed drive your investment decisions. It's so easy to get caught up in the hype to make impulsive choices that you might regret later. Developing a clear investment strategy, one that aligns with your risk tolerance and financial goals, and sticking to it even when the market is going crazy, is absolutely essential.
Easier said than done, I imagine. When you see your portfolio value plummeting, it's hard not to panic.
Oh, absolutely. That's why it's so important to do your research to understand your own risk tolerance, and maybe most importantly, only invest what you can afford to lose.
Okay, so diversify, stay calm, and don't gamble with your retirement fund. Got it. Any other words of wisdom before we move on?
One final thought: never underestimate the power of patience. Bitcoin, like any emerging technology, is going to experience a lot of volatility in the short term. But if you believe in its long-term potential, if you see it as more than just a speculative asset, then riding out the storms and staying focused on the big picture is essential.
So buckle up, stay informed, and enjoy the wild ride. This has been a really insightful deep dive into the world of Bitcoin. But as you know, this is a space that's constantly evolving. What's true today could be completely different tomorrow. It's important to stay curious, to never stop learning, and to be willing to adapt as the landscape changes.
Absolutely. The world of crypto is dynamic and fascinating, with new developments popping up all the time. It's a space that rewards those who are willing to explore, to ask questions, and to keep an open mind.
Before we wrap things up, we want to leave you with something to think about. We've seen how MicroStrategy, a company that went all in on Bitcoin, is now facing some tough choices. So we ask you, if you were in their shoes, what would your next move be? Would you hold on tight to your Bitcoin, hoping for a rebound, or would you start selling off to try and minimize potential losses? Or maybe you'd come up with a completely different strategy. Let us know your thoughts in the comments below. We're really interested to hear your perspectives.
Until next time, keep exploring, keep questioning, and keep diving deep.
You know, it's funny. We talk about Bitcoin being this revolutionary technology, this potential game changer for the financial system. But when you look at MicroStrategy, it feels like we're watching a very old story unfold.
What's interesting is how their situation mirrors some of the classic boom and bust cycles we've seen throughout history. Whether it's the Dutch tulip mania, the dot-com bubble, or the housing crisis, there's this common thread that runs through them all.
And that thread is?
It's excessive speculation, a lot of leverage, and this belief that this time things will be different. It's a powerful combination that often leads people to make decisions they end up regretting.
It's like they get swept up in the excitement and forget about the risks involved.
Exactly. And in MicroStrategy's case, their risk is tied directly to the price of Bitcoin. Their strategy is essentially a leveraged bet on Bitcoin continuing to go up. But as we've seen, the market doesn't always play by the rules.
Right. And the problem with leverage is that it amplifies both your gains and your losses. So when things are going well, it feels like you're on top of the world. But when the market turns against you, the fall can be just as fast and just as painful.
It's a vital lesson for any investor, no matter what they're investing in. Understanding leverage and managing your risk is crucial.
So what does all this mean for the average person who's interested in Bitcoin? Should they be staying away, or is there still a good reason to invest in this space?
That's where things get really interesting. Because even with all the volatility and uncertainty surrounding Bitcoin, there are still some strong arguments for its long-term potential.
Okay, I'm listening. What are these arguments?
Well, first, there's the scarcity factor. Bitcoin has a fixed supply capped at 21 million coins. This means it can't be inflated away like traditional currencies, which makes it a potentially good hedge against inflation, especially in the current economic environment.
Right. That's the digital gold argument. Bitcoin as a store of value, a safe haven asset.
Exactly. Now, it hasn't fully lived up to that reputation just yet, but its volatility could just be because it's still in its early stages. As more people adopt it and the market matures, those price swings might become less dramatic.
Interesting. So it's about taking a long-term view and betting on Bitcoin eventually becoming a more stable and established asset. What else is there?
Another big factor is decentralization. Bitcoin operates on a distributed ledger, which means it's not controlled by any single entity, like a government or a central bank. This makes it resistant to censorship and manipulation, which is a very appealing aspect for a lot of people.
It's almost like a financial system built on the principles of freedom and individual control.
Exactly. And while the current financial system is very deeply rooted, Bitcoin offers an alternative, a potential path toward a system that's more fair and transparent.
That's a powerful idea. But let's be realistic, Bitcoin still faces a lot of challenges, right? Regulation, scalability, security, and of course there's the whole debate about its environmental impact.
Absolutely. There are definitely hurdles to overcome. But the fact that we're even having these conversations, that Bitcoin has sparked so much debate and innovation, is a testament to its potential to disrupt the status quo.
So as we wrap up, what's the main takeaway here? What should our listeners be thinking about as they navigate this complex and constantly changing world of cryptocurrency?
I think the key takeaway is this: Bitcoin isn't just an investment, it's an idea. It's an experiment in decentralized finance, a challenge to the way things are currently done. And like any experiment, it's going to have its successes and its failures.
So maybe instead of trying to predict the future price of Bitcoin, we should be asking ourselves bigger questions. Questions about the future of money, the role of technology in society, and the potential for decentralized systems to create a more equitable world.
Exactly. Those are the questions that will ultimately shape the future of Bitcoin and the entire crypto landscape. And while the answers might not be clear right now, the journey itself is going to be fascinating.
And that's what makes these deep dives so worthwhile. It's not just about understanding the technical details. It's about exploring these big ideas, the potential for change, the possibility of something truly new and different.
Well said. And who knows, maybe a few years from now, we'll look back at this point in Bitcoin's history, and it'll just seem like a small blip on the radar, a minor bump on the road to mass adoption.
Or maybe we'll look back and see it as a turning point, a time when the market adjusted itself and paved the way for a more sustainable and responsible future for crypto. Only time will tell.
Indeed, the future is uncertain. But by staying informed, asking critical questions, and engaging in thoughtful discussions, we can all play a part in shaping that future.
That's a great note to end on. Thanks for joining us on this deep dive, everyone. We hope you enjoyed exploring these ideas as much as we did. Until next time, keep learning, keep questioning, and keep diving deep into the world of knowledge. So we've talked about MicroStrategy's wild ride with Bitcoin, but what's really interesting is how their situation kind of reminds us of those classic boom and bust stories from history.
Yeah, it is kind of fascinating, isn't it? Like whether you're talking about the Dutch tulip mania way back when, or the dot-com bubble bursting, or even the housing crisis more recently, there's this common thread running through all of them.
What do you mean? What's the thread?
Well, it's too much speculation, a dangerous amount of leverage, and this almost blind faith that This time, it's going to be different. It's a recipe for disaster, you know? People get caught up and end up making choices they later regret.
It's like they get so swept up in the hype, the fear of missing out takes over, and they forget to be cautious.
Right. And for MicroStrategy, their risk is tied directly to how Bitcoin performs. Their whole strategy hinges on Bitcoin going up, but like we've said, the market can be unpredictable.
And the thing about leverage is it amplifies everything good and bad. So when things are going your way, you feel unstoppable. But when things turn sour, the fall can be brutal.
Absolutely. It's a lesson every investor needs to learn no matter what they're investing in. Understanding leverage and managing your risk is so important.
So what does this all mean for the average person who's interested in Bitcoin? Should they just avoid it altogether, or is there still a reason to consider investing in it?
That's where things get really interesting, because even with all the volatility and uncertainty surrounding Bitcoin, there are still some good arguments for its potential in the long run.
Okay, I'm all ears. What are those arguments?
First off, there's the scarcity factor. Bitcoin's supply is capped at 21 million coins. That means it can't be inflated like traditional currencies, which makes it a potentially good hedge against inflation, especially with how things are going economically right now.
Right, the whole digital gold idea. Bitcoin is a safe haven asset.
Exactly. Now, it hasn't quite lived up to that image yet, but its volatility might just be a growing pain. As more people adopt it and the market matures, those price swings might calm down a bit.
Interesting. So it's about playing the long game and hoping Bitcoin stabilizes as it gets more established. What else you got?
Another big one is decentralization. Bitcoin runs on a distributed ledger, meaning it's not controlled by any single entity like a government or a central bank. This makes it pretty resistant to censorship and manipulation, which is something that appeals to a lot of people.
It's like a financial system built on the principles of freedom and individual control.
Exactly. And while the current financial system is pretty ingrained, Bitcoin offers an alternative, a potential path to a more fair and transparent system.
That's an interesting thought, but let's face it, Bitcoin still has some big challenges to overcome.
Yeah.
Right, regulation, scalability, security, and then there's the whole debate about its impact on the environment.
Absolutely. There are definitely some hurdles, but the fact that we're even having these conversations, that Bitcoin has sparked so much debate and innovation, speaks volumes about its potential to shake things up.
So as we wrap things up, what's the key takeaway for our listeners? What should they be thinking about as they navigate this wild world of crypto?
I think the main thing to remember is this Bitcoin is not just an investment, it's an idea. It's an experiment in a new way of doing finance, a challenge to the established system. And like any experiment, there will be wins and there will be losses.
So maybe instead of obsessing over what Bitcoin's price will be tomorrow, we should be focusing on the bigger picture, asking questions about the future of money, how technology shapes society, and whether decentralized systems can create a more just world.
Exactly. Those are the questions that will ultimately determine where Bitcoin and the whole crypto space goes. And while the answers might not be clear yet, the journey itself will be fascinating.
And that's what makes these deep dives so fun and engaging. It's not just about understanding all the technical details. It's about exploring those big ideas, the possibilities for change, the chance to be part of something truly new and innovative.
I agree. And who knows, maybe in a few years we'll look back at this time in Bitcoin's history and it'll be just a small blip, a tiny bump on the road to widespread adoption.
Or maybe it'll be seen as a turning point, a moment where the market reset and things started moving toward a more sustainable and responsible future for crypto. We'll have to wait and see.
Yeah, the future is still being written, but by staying informed, asking critical questions, and having these thoughtful discussions, we can all help shape what that future will look like.
Well said. Thanks for joining us for this deep dive, everyone. We hope you've enjoyed exploring these ideas as much as we have. And until next time, keep learning, keep questioning, and keep diving deep into the world of knowledge.
Please subscribe, like, and comment.